What is up, guys? Dirk here. Happy Wednesday. I just wanted to give you a quick update on Bitcoin and Ethereum since we are seeing a bounce. So these are the levels that I'm watching. Let's dive into it. By the way, there's less than 24 hours left to join my VIP membership at the discounted special offer. First link in the description down below if you want to get in on this. I'm probably not going to hold any special offers for quite a while after this. So if you want to get in now, you need to do it before the timer hits 0, and then you still have a full 60 days to decide if you want to stay or get a refund. But the special offer closes tomorrow, so in less than 24 hours where you're watching this right now. So let's get back into the charts here. We have the daily chart of Bitcoin, and you can see what we have. We're back at 22,780, and what we have is a very clean bounce here. We got this pullback after the bearish divergence, right? So I warned about that bearish divergence. We did get a pullback, which was to be expected, then that is good. We've seen the indicators come down quite a bit. We pulled back here, but very clean bounce. This high and this high. So this was resistance over here, turned to support so far. We got the bounce. So what's going to be interesting to see is, does this continue the bullish trend? And as you know, if you've been watching my channel or following me, I have turned bullish since we reclaimed the 3-day 50 moving average several weeks ago. We now also have the golden cross on the daily, which is a long-term bullish signal most of the time. We're above the 50 and the 200. So I am bullish personally as long as the price is above the golden cross, above the 50, above the 200, above the 3-day 50 moving average. This is all just indication of bullish price action until invalidation. Obviously, if we go down here and we break below this 200 moving average, 19K-ish is about the line in the sand for me. As long as we're above there, and even here is even better. I mean, we bounced from 21. We didn't even go below 21 so far. So this is, for me, bullish, and I hope we see this continuation. We have a lot of people shorting already, thinking this is a scam pump that's just going to completely retrace. And while that could end up being the case, in my opinion, we have to follow the higher time frame trends, and we got all this bullish confirmation. So I remain bullish as long as we are above these moving averages. The next target would be the August 2022 high around 25K. Take that out, take out the liquidity here, stops to be hunted for anyone that's been short and place stops over there. And then if we can get above this level, it is also the 50-week and the 200-week moving average. I can show you here real quick. Let's change this to the weekly. You can see we have that right above us over here. That is the 50. This chart doesn't show the 200 for some reason, but it is at that same level. So we can break above here with the weekly close. I think that is very, very bullish. And it's the same deal as with the golden cross on the daily. If we get above the weekly 50, the weekly 200, it's bullish until invalidation, which means a drop below it. So we reclaim this 50, and it's not just a week above and drop back down. We get above here and we get a weekly close above here. I think it's going to be bullish, and I think we see continuation. The next target would be these highs over here from May 2022, which is around 32K. And if you zoom out a little bit, that is also very much the support around this area from the May 2021 crash. So support here, resistance here. I think that's going to be a key level. If we break 25, my bets are on 32. And then, of course, if we can get to 32, we have to see maybe we take out this one, which is also the Fibonacci golden pocket at around 48,000. But obviously one level at a time. Let's see if we can reclaim 25 first. If we can, we get a weekly close above there. Things start to get interesting. I'm starting to look for 32K. And at 32K, we have to see how is everything looking. Are we still bullish? Maybe we get that push to the Fibonacci golden pocket, the same like 2019, which at this point is around 48,000. So with Bitcoin, very simple. I am bullish as long as we remain above the golden cross, above the 200, which is 19.7, above the 50 especially is even better. As long as we're above the 50, the trend is simply bullish here on the daily. So let's see if we can bounce from here. Let's see if we can take out 25. Let's have a quick look at Ethereum because it's a similar situation here. We're trading back at 1580, and we have the golden cross on the daily in the same way. The 50 in blue crossing up through the 200 in red. We got above these averages. We got this bearish divergence here. We got the pullback, but so far the pullback was to the 50 MA on daily, it is still above the golden cross, and as long as this holds, in my opinion, we are still bullish. Okay, that is how I like to look at these trends, and we just have to look at the higher time frame indicators. This is simply bullish. As long as price is above there, it bounced off it, that's good, right? So we are hoping here for bullish continuation. Obviously, it's all about probabilities. If we break below these averages, so if we break below at this point 1430, then indeed it might be a bearish signal with much more downside to come. So we play the trends. As long as we're above here, I think it's bullish. If we break down below it, we have to consider that maybe it's not bullish anymore and it turns to bearish. You have to be flexible to be able to adjust to the trends. But as you can see here, and you can see this yourself, in the same way on Bitcoin also, a daily golden cross is pretty significant. You can see we had the death cross on Ethereum here in January of 2022, and basically we had the whole bear market. We have now gotten this golden cross about a year later, and it doesn't happen often. You can see the last one on Ethereum, it happened a long time ago. It happened in 2020, and then we got the entire bull market. So while of course it could end up being a fake out, we could end up dropping down here again. That is always the case. That's why I say you have to be flexible. If this proves out to be a fake signal, or we get a black swan or whatever, you know, once it goes below here, the signal is invalidated and we turn bearish again. Okay, that's simply how it is, and you have to trade the trends. But as long as we're above here, we have to assume that there is a decent possibility based on the data that we could be seeing a lot more upside, especially if we got the pullback, the retest, and we're bouncing from here. In my opinion, just as long as we stay above it, it is bullish and we have more upside. And like with Ethereum, in the same way, we're targeting the previous highs. So here, this high, 1795, next target. And then this high over here is about $2,000, just over $2,000. So these would be the next obvious targets. But again, in the same way as with Bitcoin, if we do reclaim weekly moving averages, then things start to get interesting, because then we're looking at potentially, you know, these lows over here, about 2,500, maybe even this high at about 3,500. And that's not going to happen by tomorrow, but if we are indeed in a new bullish trend, even if it's the same like 2019, we could be looking at several more months of upside, and going from where we are today, a 2x within the next, 4 to 6 months is definitely not impossible. It's done that before in previous bullish moves. So we know it is possible that that could happen. But again, the key is very much we have to see that it stays above these moving averages. For me in validation, if we get below this 200 moving average, $1,430 at this point, I would start doubting the bullish scenario, and I would start to consider potentially a bearish continuation and maybe a retest of the lows or even new lows. But as long as we're above it, the trend has flipped bullish, and that's how I'm going to continue to play it until invalidated. And then just another cool little example of the range, how it's possible to trade this. I have made a tutorial here on this channel before, and I've shown this setup multiple times already since then. It is just a very profitable way to trade, and it's a very profitable high probability setup that you can repeat over and over again. So by the way, if you do want to trade, I trade on Bybit personally. You can open an account there. If you use my link in the description down below, you can get up to $30,000 deposit bonus, and you can participate in my trading competitions that I hold with prizes up for grabs and stuff like that. So if you haven't got an account on Bybit, create one through the link in my description below, and you can get the best benefits there. So this is a 4-hourly chart now. We have the range over here from these lows to these highs. We don't trade in the middle. We look for a sweep above it, so either a wick or a proper multiple bars, and then a drop back into the range. So we got that over here, and there was the possibility over here for a short position. I actually broke that one down on the channel, so there is a video about that. I will link to it up here as you're watching, or down in the description below, or you can just go and look for it on my channel. So we drop back into the range. At this point of the retest of the range, we put the stop at the previous high, and we target the range low, and that one got hit. So that would have been a 1 to 5 risk reward over here. Now we got the same situation over here, but in reverse. So this one was a wick and a pullback into the range, but that one was not a proper one. So if you would have taken it here, sometimes it does work, but you could have gotten stopped out there if it dropped back below, but then you could have taken it a second time in that same way. So once we got here below, so obviously it went below these lows over here, then we got back into the range. So at this point, you could have taken a long position with a stop at or just slightly below that previous low, targeting the range high, right? And we have yet to see if it is going to go that high, but the first target would be the middle of the range, which it has already achieved. So at this point, if it would achieve the top here, it would be 4.46, and this would be entering here at the top of the range. That wick that we got here on the CPI yesterday, that would have still been within the stop loss period, and even if you would have stopped it here, it would have been a 2R if you take profits at the middle of the range. Or you could simply decide to put a stop at break even and see if it continues going higher. But this is another great example of how you can trade the range, and this range specifically gave over here. So this is a 5R over here and a 2R already here, very simply just based on trading the deviation of the range or the sweep of the range, drops back into the range, put a stop at the high, and it works like that. And even if you would have gotten stopped out, let's say you got stopped out twice, okay, so you minus 2R, and the second times it works, then you would have had plus 7. So you would have still been up plus 5R, even if you got stopped out 2 times. And this is just a very simple and repeatable strategy. You identify the range, you don't trade within it, you wait for a sweep, and then you take a short towards the downside, and you wait for a sweep of the lows, and then you can attempt a long towards the top, and obviously once it's back in. So I hope you enjoyed this video. Smash the like button if you did, subscribe if you are not yet subscribed, create a Bybit account through my link if you don't have one yet, and if you're still not in my VIP membership, there's less than 24 hours to join before the price goes back up to the original price. So it's up to you. Hopefully I'll see you inside. Thanks for watching. See you in the next video.